Alrighty guys, what is going up? Welcome back to another episode. In today's video, we are going to be talking about the one and only NIO, the Chinese electric car manufacturer based out of China. The company's been growing at a very, very rapid rate, and we're going to be looking at why I am buying more of this company. Now, a while back, I did purchase roughly $10,000 worth of this stock, and this was all the way down here at around $11. So I've been up, I've been down, and I completely understand that NIO is a pretty volatile growth stock, meaning it does go up and down at pretty rapid rates, yeah, but the overall long-term trend of this stock here is up. So really, almost every single time you guys invest, you have a good outlook for the future, which is fantastic because you never want to invest in a company that has a downward trend. That's just a recipe for disaster. So right now, in my opinion, I think NIO is extremely undervalued. And really, there is some pros and obviously some cons about NIO, but first let's actually talk about the technical analysis. So all the charts. So you guys can see that NIO has a nice upward trend. And the beautiful part about NIO is every time this stock is above this yellow line here, it acts as overall support. So you guys can see it comes in contact, we get buying pressure here. Comes in contact again, we get more buying pressure. Comes in contact again, we get buying pressure. So now, guess what? We had a little bit of sell-off. It's coming in contact at $37. So one, I'm just going to buy more shares. Two, I'm going to be buying on a support line. So I know that there's going to be a lot more buyers than sellers entering this position. Not to mention, looking at it on the RSI, you guys can see it's at a 43. And for a growth stock, especially like NIO, this has a tendency to trade in between a 48 and about a 75 to 80. So right now, this is very undervalued on the RSI too. So I think right now there could be a possible swing trade or just hop in for a long-term investment, just because of this overall support. If you were going to swing trade it, hop in at 37, set your stops below this yellow line here, at 33 all the way down to 31. So you're pretty much risking, maybe $3 to possibly make, it looks like $6 or $7 a share. So risking 3 to make 6, 2-to-1 risk reward. So right there is a pretty decent swing trade if everything goes good. If anything, you just hop out if it breaks below it. But if you're a long-term investor like myself, because this is a company that I think in the next 2 to 5 years could be easily worth, 80 or 90, if not $100 a share. Just the overall growth of the entire electric sector, we've seen a ton of buyers enter. So I really think over the next couple of years we'll see a lot of growth from NIO. So what is the downside of NIO? Now, NIO is obviously pretty much, people compare them to Tesla. They're pretty much the Chinese Tesla. So what does that mean? One, they have had and will probably have for a couple of months, if not a year, have a little bit of production problems. And I get it, I get it. But the production problems are good things. The reason why is because they are hitting record deliveries. So it's not production problems, on the plant. It's they can't hit how many cars they need to sell. Meaning they're having 100,000 people order it and they can only deliver 70,000, something along those lines. I explained it weird, but I hope that makes sense a little bit. So really, the company's growing at a very, very fast rate. The second thing that's not very good about the company is it's not profitable. But hey, it's very, very common to see companies, especially smaller companies that are just getting started, not profitable. So I really think in the overall long-term outlook of NIO, we'll have profitability, we'll have a lot of things entering this position. We'll probably have a decent margin, probably very similar to Tesla at around 9% or so, which is pretty decent. But overall, I really think NIO definitely carries a lot of potential in the long term. Guys, the cars are phenomenal, very similar to Tesla. They have a thing that's pretty much like Alexa in the car, so you can ask questions, get directions, change the stereo, radio, and all just talking to your car. And obviously they are in the works with the autonomous driving. So I think there is a lot of potential. Another downside is their earnings. They have missed some earnings, but that happens. It really does, especially with an overall super sought after investment, because a lot of people want, a phenomenal earnings and they miss it, and it happens. So you have to understand that NIO is a little volatile, but right now, hopping in on a support line, the overall outlook of this company is very strong. And I think that this is definitely one to hop in at. You also have to realize it's a little bit of a risky one. So it's going to have a little more swings in your portfolio. So maybe before you invest in NIO, have a little base of ETFs or blue chip stocks before, or you guys can be risky. It's all up to you. It's your portfolio. So I hope you guys enjoyed it. And overall, I hope you guys got something of value out of this video, really explaining why I am buying more NIO. So we'll see you later. Don't forget to check out my course down in the comments, and remember to stay happy, guys, stay positive, and stay safe out there. Take care, everyone.